Recent changes in the securities transaction tax have forced most traders to slow down their process of trading. The technical way of slowing down your trading process is simply by raising your time frames. When you raise your time frames, your trades have wider stops and wider targets. And because of the wider stop that is initially placed on your stock, they will warrant fewer quantities. So, keeping that in mind, it is important for us to understand that it is because of this change that it makes more sense to include longer time frame assessment in your overall trading plan. The market has been correcting, and that is well known, and currently the hypothesis or the question is, will there be some relief from the incessant selling that we are seeing in the markets? For example, the chart in front of us is the Nifty mid cap index. This time the sell off in the market is systemic. By systemic, I mean that the sell off has been consistent across all indexes, and very few stocks have been spared the brutal beating that the market has handed out to them. For example, here in this chart we will see that from its highs of nearly 60,100, roughly 60,000, this security has already breached the 50,000 low. In other words, at an index level, we are seeing a 16% correction in less than 4 months. In the last 4-5 months, the correction, which has been of approximately 16%, the index has given away almost all of its gains for the year. And if it were to close at the exact same level, we would see that the returns would be maybe 1% for the year. But the question is the index ready to give some short-term respite? The chart structure in front of us clearly indicates that this is an uptrending stock. We can see a higher top and we can see upward sloping moving averages. We will also see that on the longer time frame, this looks like a pullback in an overall structural uptrend. So there is no ambiguity that this stock would be highly oversold on the daily time frames or the smaller time frames. In order to check for reversal, I have consistently maintained that we do not use the trend time frame, that is the monthly time frame, in order to make tactical level decisions on the market. We use this time frame only to make a bias, and from here the bias is reasonably clear that for an uptrending stock I want to buy the pullback. Now the question is there justification to go long at the current levels? So let's just assess the chart structure on the smaller time frame, and here I will first remove the moving average because we are not using this time frame to determine trend strength. When we look at this chart, our focus has to predominantly be on the last price action, and the last price action that we can see, that is of today, is that of a Dragon Fly Doji. This candlestick right here is a Dragon Fly Doji. A doji in the market typically signifies an area of indecision where buyers and sellers are yet to make up their mind whether or not the market should continue in the previous direction, or it should take a hold. So this more specifically is the Dragonfly Doji. If you are interested in having more details on this particular topic, you can simply go to Google and make the search a Dragonfly Doji. And here through these images you will see that this is essentially a potential reversal pattern. What do we mean by a potential reversal pattern? For a reversal pattern to have in play, there must be an existing trend there must be an existing trend up or down. Here we can see that because there are a series of lower top lower bottoms, the trend underplay on the daily is one of down, a weak downtrend. Consequently, the question that we are asking is, will this doji signify a potential reversal on the upside? In my opinion, there is justification to make the assumption that yes, that the low today could hold for some time, and the reason is the formation of this pattern on a structurally bullish chart. But even more macro or more fundamentally, we will see that the Indian Prime Minister will be meeting the US President tomorrow. So with the exception of a day or two of perhaps consolidation, we should expect that the issue of tariffs specific to India would be taken up directly, and some common grounds will reach, wherein we will have potentially US products at reasonable prices in the Indian market, and in exchange most of our businesses would be undisturbed. Further, we can also see that today, while the Prime Minister is in France, they are already trying to finalize a potential deal on the sale of Pinaka missiles. Export of Indian weapons into Europe will be a first. First of all, India exporting weapons in the first place is a first. To export it to developed economies is a huge boost because a lot of countries have their buying decisions pegged to other countries. For example, if France approves something, then there is a possibility that some country which might be Francophone Africa might default approve the vendor without any further testing. So the more difficult or the more regulated the market a supplier reaches, the other markets become easier to tackle and getting regulatory approvals becomes significantly easier. So with that in mind, I think that perhaps the market is extended oversold. Keeping this particular structure in mind, it looks like this is a pullback, this is a potential higher bottom, and the fact that we have a Dragonfly Doji on the daily, which is a potential reversal candlestick, we could assume that the low that was formed today might be defended for a sufficient period of time. It will be interesting to see how the remaining two trade sessions pan out in the week, as this will be highly critical. Just to have a look on what is happening on the weekly for this particular chart. On the weekly, we are not seeing any particular reversal. On the weekly, the week is still to form, and the chart is ripe with a lot of possibilities. A closing, so we can already see the election. We can already see the election candle right here. This is the candlestick that was formed at the time of the election. There is no doubt that this is a very strong support because of the candlestick that is formed here in itself. A rejection of price in the beginning, and then it continues with the uptrend. There is no doubt that 47,000 will be a massive support, but it should be considered pretty unusual if such a candle has to be retested. So in my opinion, a subjective opinion, only on the basis of this candlestick Dragonfly alone, I'm making the assumption that there is possibility that the low will hold. However, we will see if that does happen to be the case, because this candlestick does have the potential of actually reversing the price change. So I hope with that understanding, you can plan your trades better in the future. All the best.